Good afternoon. This is John Courtney, Certified Financial Planner and Wealth Manager at Village Wealth Advisors. Today is April 30th, and this is my fourth recording and market update since the coronavirus crash began. Today I'll be discussing the pricing and the rationale for the pricing for the S&P 500, and then most importantly, what a recovery might look like as this coronavirus crisis hopefully begins to move towards an ending. States are beginning to reopening, but how quickly will our economy recover, and what does that mean for the stock market? So first off, the price of the S&P 500 or any stock market index is based on kind of an aggregate intelligence of all the participants in that stock market. Every small investor to very large investor, as they make buy and sell decisions for each of their individual stocks, that's how a final price for that stock is determined. And then if we take the stock price for all the stocks in the S&P 500 combined, we get the final level of the S&P 500. Now, as we discussed in my last update, this is not an equally weighted index. It's not like every stock in the S&P 500 gets an equal say in what the value of the S&P 500 should be. In fact, the top 5 participants, the top 5 companies in the S&P 500 make up about 20% of the value of the index. But still, there's kind of an aggregate intelligence, a combined intelligence of all these investors from around the world that go to justify the price of these stocks. And not only does it reflect their current impressions of corporate profitability and sentiment about the economy, but also their expectations of the future. And there's a certain amount of comfort in knowing that, well, gosh, if this reflects the aggregate intelligence of all of these participants, it must be right. The problem is that it isn't always right. So let's talk about the likely recovery scenarios from this. We've already seen the drop, and we've recovered a bit from the drop, but the recovery hasn't actually happened yet. So what might that recovery look like? Well, there's 3 different possible recoveries that we'll be discussing today. The first is the V-shaped recovery, named because it looks like a V. In this case, we get back to our previous economic levels and previous level of the stock market in a matter of months. It's a quick recovery. Now, the difference between the V and then the next one, the U-shaped recovery, is we still get back to previous levels, but it takes longer. That recovery isn't measured in months, it's measured in quarters. And then a worst case scenario is the swoosh-shaped recovery. You could think of it like a Nike swoosh, where the recovery, again, we do get back to previous levels, but now the recovery is measured in years, not months or quarters. Now, if you believe that we're going to experience a V-shaped recovery, sort of the top 5 things you have to believe in order for that to occur is that, 1, the unprecedented level of government intervention works, and it works exactly as intended. Second, that the financial sector of our economy continues to be stable, continues to be liquid, and continues to lend money to itself and to businesses. Third is that all of the demand for goods and services that we haven't been able to utilize over the last couple months of sheltering in place will all be released upon the economy once the shelter-in-place orders are lifted and businesses begin opening. So there's been this pent-up demand that will explode upon the economy. Fourth is that the data about treatments, potential treatments for COVID-19 are going to be effective, and you would also need to believe that that perhaps a vaccine or some way of preventing the transmission of the disease, not just treating the disease, will also roll out and be effective. Fifth, you would have to believe that the reopening of states and the reopening of businesses is going to be effective the first time around, and that it's not going to lead to reclosures or respreading of the virus. Now, in case you don't believe that all five of those things are going to happen perfectly and that the miracle recovery will become a reality, then you're probably thinking about maybe the top five reasons you should doubt a miracle economic recovery. The first being that all of the unprecedented government intervention that we experienced will then lead to higher future taxes. You would also believe that the rest of the world's economies aren't going to experience a miracle economic recovery. And so we will experience lower global trade and disrupted supply chains as a result of a global recovery from this pandemic. Finally, you would also believe that the 30 million people who are currently unemployed do not immediately go back to their jobs upon the lifting of the stay-at-home order. You would also be concerned that we could experience possible stagflation, which is a period of time where we have both high unemployment, so those 30 million people don't go back to work, but we also have high inflation, where all of the money that the government has pumped into the economy is not immediately repaid, and so all of that extra money creates higher prices. Finally, the fifth reason you might doubt a miracle recovery is because you believe there will be a wave of corporate defaults and corporate bankruptcies. Now, if any or all of these top five reasons to doubt the recovery actually do take place, it's a strong argument to believe in the swoosh-shaped recovery, where it takes years, not months or quarters, to get back to our previous level of economic activity and stock market level. So what you might be doing is you might be weighing these different possibilities. You know, gosh, do I believe in the miracle recovery? Do I doubt the miracle recovery? And that will shape your belief as to whether it be a V-shaped recovery or something more like a swoosh-shaped recovery. I can reveal to you now that I believe quite solidly I am a doubter in the V-shaped recovery. I think we are almost certainly going to, at best, experience a U-shaped recovery, where it will take months. It will take quarters to get back to previous economic levels, or even maybe more likely a swoosh-shaped recovery, where now we're measuring the recovery from this economic crisis in years, not months or quarters. Now, to take you back in time, you will recall that 2 years ago, I started raising what I've described as a war chest in client portfolios, where we began to move about 15% of your portfolios over into conservative defensive type investments in preparation for whatever type recession might come our way. Of course, we didn't know at the time it was going to be a pandemic related recession, but I was concerned that the market was inflated and that some excess returns could be safely banked, and that has panned out. So what we began doing back in March 20th was begin taking that war chest and buying back into the U.S. stock market, buying low. And you may take note that March 20th was near the bottom of this most recent dip. So the timing of that rebalancing could not have been better. And we did a pretty large movement back into U.S. stocks at that point. We also did another buy back into the U.S. stock market on April 15th, moving a little bit more of that war chest back into U.S. stocks. And our investment strategy plan going forward is to continue to invest that war chest monthly in mid-month for the next 9 months, until that war chest is completely reinvested back into U.S. stocks. But that's the tentative plan. The plan is flexible depending on whether it starts to look like we're going to have a U-shaped recovery or a swoosh-shaped recovery. And that will allow us to either decelerate or accelerate our rebalancing strategy, our investment strategy, our deployment of that war chest going forward. Now, the experts seem to agree with me. What I've shown you here are the results of I think a 3-day-old survey that Bankrate.com did of investment bank analysts and market participants on what they thought the shape of this recovery might look like. Startlingly, you can see that 0% of the respondents thought that we would experience this miracle V-shaped recovery where we would be back to previous economic activity in a matter of months. So do not believe the political hype that's going to be what we experience. By far, most of the respondents believed in either the U-shaped or the Nike swoosh shape. There's a few other shapes on here that we won't get into as to what this recovery might look like. So you might then ask the question, why does the US stock market currently look like this? We had the sharp decline, and then we've had the sharp incline, because this sure does begin to look like a V, not a U and not a swoosh. And that's a big, important question. That leads me to believe that maybe we should go a little bit slower with the rebalance implementation strategy that we have in place. Now, our next date to begin to reinvest part of that war chest is mid-May, so May 15th. And depending on what we see in the market between now and May 15th, that will determine whether I continue on the plan of reinvesting the war chest or whether I throttle back and take a breath and wait a little while to see whether the stock market seems to continue to predict a V-shaped recovery, while myself and all of the other experts believe that we will not experience a V-shaped recovery. So I will continue to keep you updated on that. I hope you have now an idea about how myself and other experts that are looking at the economy are viewing the possible recoveries. I hope you have an idea about what factors I'm looking at and you might look at in gauging what this economic recovery might look like. I want you to know that I am watching this. I'm on top of this. We are actively looking at how to invest your portfolio and how to manage your money to be sure that you reach your goals and you're not exposed to any more risk than is appropriate for your circumstances. If you have any questions, if you want to talk through your personal situation, please don't hesitate. Please reach out. Myself and my team, we are running at full throttle and available to you. Thank you so much. Have a great evening. Stay safe and stay healthy. We'll talk again soon.